So anytime I do a presentation, I do like to start with a joke or an interesting fact. And today I have an interesting fact for you all. So did you know, let me see, all right. Did you know that in 1736, after a fire destroyed most of Philadelphia, Benjamin Franklin established the first fire department called the Union Fire Company. He also realized that people could not protect themselves from natural fire causes such as lightning. So it was at the meeting for the Union Fire Company that Franklin came up with the idea for fire insurance. So Benjamin Franklin, created Philadelphia contributionship for the insurance of houses from loss of fire. The insurance agency is still alive and well today, kicking in. It's considered one of the most notable property insurance companies today. Okay, there we go. And they offer 7-year policies to cover the damages to burned buildings. And so I thought that was a cool little piece of history there when you think about, fire insurance. And of course, most of us know it as homeowners or renters insurance, property insurance. I know here internally, I work for Cashdollar State Farm Insurance. So here at State Farm, we still refer to it as fire insurance. So we're going to hop in here and just give a brief overview of what homeowners insurance is. And of course, we're going to dig a little bit deeper, but the brief overview is homeowners insurance is a type of insurance that will provide coverage for your home and other personal property in the case of a covered loss. It can also provide liability coverage if someone hurts themselves at your home or you cause property damage. Homeowners insurance is not only desired, but in many cases required by your mortgage company. So they will also be protected financially if your home experiences a covered loss. All right. So why homeowners insurance? One reason is because it is the single biggest investment that we'll make. In today's market, I don't know if anyone has recently been shopping for a home or anything, but in today's market, most single family homes, especially in the area that we're in, range from anywhere from $48,900 to $125,000. So when we think about it as simply dollars spent, there really isn't another item that we will purchase that will cost that much. So again, why homeowners insurance? Because it's a big investment, basically. It's also, did I skip a slide? Pardon me 1 second. Okay, what's that? Now it seems like they're a little, okay, that was weird. Sorry, guys. All right, got it together now. All right, so the largest asset. So we know that whenever we buy something, it becomes an asset. The house we purchase has value and can build in value over time. So that's another reason why we want to protect that asset. Another reason to why homeowners insurance is because of the contents of our home. We have to consider everything that we keep inside our home. So we're talking furniture, we're talking appliances, clothes, jewelry, art, any type of collections that you have collected over time. There is value in everything that we keep in our home as well. So you want to make sure that that's protected. And last, but certainly not least, personal liability. And sometimes you don't, think about personal liability when it comes to homeowners insurance. And we'll also talk about that when it comes to renters insurance as well. But so let's just say what happens if you have a visitor, say they slip and fall. These types of accidents can result in court decisions awarding large sums of money to the injured party for medical expenses and pain and suffering. So having homeowners insurance in place helps protect us from incidents like this. All right. Okay, let me just click. Okay, I just want to make sure these slides are working properly. Okay, so let's begin to break everything down just a little bit. What does homeowners insurance cover? And it's pretty simple. The most important thing it covers is the home itself, the physical dwelling, the physical structure of your home. That's pretty cut and dry. Another thing that your home insurance will cover is other structures. So for example, if you have a detached garage, if you have a pool house, if you have a guest house, a greenhouse even, a shed, a tool shed, anything that is detached from the house that's on the property itself, your homeowner's insurance will cover that. Your personal property. Excuse me, this covers the contents of the home. Again, as we already mentioned, things like your furniture, appliances, or clothing. So it was described to me not too long ago, and I thought that it was like a good analogy. Like if you take your home and you turn it upside down, everything that falls to the ceiling is what would be considered your personal property. So you're not looking at like cabinets or, things that are built into the house. Anything on the ceiling would be considered your personal property. So just as a side note too, certain types of property may have specific dollar amounts. Items like jewelry, silverware, cash and collectibles are still personal property, but they may not be covered wholly under your actual personal property coverage in your homeowner's insurance. But there is what's called a personal articles policy, which a lot of folks get for jewelry. If there's, a wedding ring or something that maybe was passed down to them and they want to make sure that it's, protected, there is it's called personal articles policy. That's just a side note that you can purchase to, to protect those things as well. So loss of use or additional living expense is something that your homeowner's policy covers. So if your home is damaged by a covered peril, and covered peril, let me just in case you might be asking what a covered peril is. So it's theft. Someone breaks into your home or steals something, fire or lightning, windstorm or hail, smoke, vandalism or malicious mischief. Try saying that 3 times. Freezing of the plumbing system, the weight of ice, snow, or sleet. Those are all considered to be covered perils. So if your home is damaged by one of those covered perils, and the loss of use or additional living expense will help meet the cost of, and now this is in the instance where you can't go back into your home is uninhabitable for, because of one of those reasons. So the loss of use or additional living expense will help meet the cost if you had to stay in a hotel. If your house was going to be uninhabitable for quite some time and you had to go rent, an apartment, it would cover that expense. Eating out, other living expenses such as like laundry. If you had laundry to do, this coverage right here would cover those things. It would also reimburse you. Let's say you own a home and you rent a room out in your home. This coverage would also reimburse you for any income that might be lost because you're no longer able to rent that room. And excuse me, excuse me, I really like this coverage because typically, when something happens to your home, it's one of the number one worries, like where are we going to go? How are we going to pay for it all? So this loss of use and additional living expense coverage, I think, is really a great addition to homeowners. And also we'll look at it again in renters too, but it's definitely a great coverage to have. All right, and personal liability. So we'll dig a little bit deeper into this, although I did mention it, excuse me, a moment ago. So personal liability as part of your homeowner's insurance policy provides protection against legal liability for bodily injury or property damage. If a third party is actually accidentally injured at your house, your personal liability coverage would kick in for that. So let's just say you have a guest at your house and they trip and fall over your child's toy. They break their leg and decide they want to see you. Personal liability would kick in this instance. Another thing that homeowners insurance covers is medical payments, also known as guest medical payments. This section provides like limited coverage if a third party is accidentally injured and needs medical treatment. So just an example, just say that you have a friend over, you guys are preparing dinner together. They cut their finger and need stitches. You can pay for their medical expenses with this coverage. So a lot of great, and I don't know if anyone knew, but a lot of great coverages come along with just what you think is basically insuring your home. But in insuring your home, you get all of this additional coverage, which I believe is great. So now what we're going to do is just take a look at an actual homeowner's quote. This is a quote for a customer of mine who just purchased a home probably about a month ago now. But so the first thing that you will see is the cost itself. Her monthly premium is $72.58 a month. It is $871 a year. And I did the math just a little bit further, and it breaks down to about $2.42 a day. And, whenever you think about that, it is very, it's quite affordable. But usually what happens when you own a home is your insurance is escrowed with your mortgage. So you're not actually paying your monthly premium outright. Whenever you pay your mortgage, when your insurance is escrowed, it is covered in that cost as well. So you pay your mortgage and your homeowner's insurance is covered when you pay your mortgage. The only time that you would pay your mortgage out of pocket is if you own your home outright. If your home is already paid off, you still have homeowner's insurance on it, that's really the only time that you would pay it out of pocket, have to be pay your monthly premium. All right, so this next slide, and I don't know I know it was kind of blurry for me, and so I hope you guys can see it somewhat, but this is really going to break down what's covered and the things that we've already talked about. But on the first line, you'll see dwelling for $232, or not $232,000. So if you remember, we mentioned that dwelling is the house itself. So that's how much her home is covered for. The next line you'll see is increased dwelling. When you hear us say farm, whenever you cover your home by at least 80% of the cost of your home, State Farm gives you an additional 20%. So essentially, this customer's home is covered for $278,400. So what this means is, God forbid, her home completely burned to the ground. She would have $278,400 to rebuild her home. So that's basically what that means. Next is the dwelling extension. In this instance, it's because she has a garage. So if the garage burns down in that same fire, she has $23,200 to have her garage rebuilt. The next you'll see is her personal property. Her personal property is covered for $174,000. So, remember the scenario I just used a moment ago. If we turn the house upside down, everything that falls to the ceiling is considered your personal property. If you have children, the children's toys, your bedroom furniture, everything. So that would be, in this instance, it would be covered by $174,000. The last line that we'll look at on this page is the personal liability. Again, we've talked about that. And here you'll see that her amount for personal liability is $300,000. Now, with both homeowners and renters, you can have like $100,000 in personal liability up to, I believe, $1 million. But for her case, because she has a pool in her backyard, we chose to do $300,000 in personal liability because that pool adds an additional risk. If her daughter's friends or children's friends came over and they're swimming, God forbid something happens, that $300,000 in personal liability would kick in and take care of in that instance. It also covers if you have a dog and your dog bites someone, if you have a tree and it falls and it damages your neighbor's property. It'll also cover the cost of legal defense in the event that you are sued due to any of the scenarios and many others. So that is our actual look at a homeowner's quote. But before we move on, any questions before we move on and look at renters insurance? Are there any questions? And I'll pause and let Katie let me know if there's any questions out there.
No, I just wanted to acknowledge you guys, just let you guys know that the room's alive.
Oh, thank you. Thank you, Diamond.
So far, there's nothing in the chat, but if people have a question, feel free to type something in there or bring yourself off mute if you would like.
Yeah. Am I making it clear? Is that yes, no, somewhat?
I mean, I think it's clear.
All right, cool. Thank you, Katie.
Yep.
All right, guys. So we're gonna move forward and look at renters insurance here. And so the question is, what does renters insurance cover? So you will find many similarities between homeowners and renters insurance, but in short, renters covers what you own. Whenever you are renting a property, most landlords already have insurance on the building itself. Their insurance will cover the building and any damages due to negligence. Just meaning that if you get in there and you're moving and you accidentally put a hole through the wall or damage the property and somewhat, that's what the landlord's insurance would actually cover. But renter's insurance will cover what you own, what you brought into the property. So coverage for some of the most common causes of property damage and loss, such as theft, which we talked about being a covered peril, vandalism and fire, normally is entirely up to you whenever you're renting a place. So without renter's insurance, you would have to bear the financial burden of a loss on your own. So, including the hotel stay, if you can't live where you're, if you can't live in the apartment because of, a covered peril, you would have to, without renter's insurance, you would have to come out of pocket and pay for hotel stays or, everything that loss of use would cover. All right. So moving on, most renters' belongings cost more than they think. I know the one thing that I'm guilty of is purchasing new things and not increasing my coverage. So keep that in mind, whenever you purchase something, if you purchase new furniture, if you purchase another television, if you have renter's insurance already or you're looking to get renter's insurance, make sure you keep those things in mind. But in fact, most renters, the average person has about $35,000 worth of belongings that are probably not covered by the policy that your landlord would have. So if you take a moment to add up the approximate cost, if you have a computer or laptop in your home, television, most of us have more than one TV in our home. I think I have 4. My daughters each have one. We've got one in the living room. If you have the stereo, furniture, jewelry, clothing, some of those things that we mentioned before, all of those things have to be or should be taken into account whenever you are thinking about how much property you own so that it can be covered sufficiently. Ask yourself, and this goes for both homeowners and renters, but if a fire gutted your home tomorrow, would you have the cash to replace everything that you currently own? Speaking for myself personally, there is no way I would not be able to incur that cost without, having renter's insurance. So I will say that you have to ask yourself that question too. And most of us can't, so that's why insurance definitely is, I would call it a necessity. All right. So here we are back to the personal liability again, but renter's insurance also covers more than just your property. Much like I said, these homeowners and renters policies do have have a lot of similarities. And the average renter's policy can include up to $100,000 in liability coverage. Normally, 9 times out of 10, whenever I write a renter's insurance policy, we will leave the personal liability coverage at $100,000. Usually that is sufficient enough to, to cover anything that happens. So in the event of a covered loss, your insurer will help you cover the cost if you're held responsible for injuring another person or damaging someone else's property, including your landlord's. Moreover, this coverage applies whether the incident occurred within your residence or elsewhere. So here's a did you know or an important fact, and this same goes with personal liability for homeowners insurance. is that this liability insurance covers you wherever you go. So let's say you go to Walmart and you ram your buggy into somebody's ankles. And they're like, oh, they want to see you. They're so injured. They want to see you. They're so upset. Your personal liability will be used in this instance. That's when it kicks in. So don't go to Walmart though, ramming anybody's ankles. I think all of us have had that maybe a time or two. It hurts. It's not fun. All right. So some of you may be asking, like, how much in renter's insurance do you actually need? So the first thing to know is that renter's insurance is relatively inexpensive. According to the Independent Insurance Agents and Brokers of America, the average renter's policy costs just $12 a month for up to $30,000 in personal property coverage. So that's solid coverage for, I don't know if there's any coffee drinkers out there or, anything, but it's, for less than a cup of coffee a day. So doing the math, $12 a month, basically your renter's insurance breaks down to 40 cents a day. Who couldn't, you know what I mean? Like, why not have all of the benefits that come with, renter's insurance and homeowners insurance? A lot of people may think that, oh, it's going to cost me so much money, I can't afford to have it. And I think the follow-up response to that is you can't afford not to have it. You don't, I guess other, folks may say, oh, well, you pay it and then you never use it. But it's also good to have that insurance, because you don't need it until you need it. Unfortunately, I've seen where, somebody has experienced a loss, a fire, house fire, and they don't have anything, no homeowners insurance, nothing to kick in. And so like the family members might, start up a GoFundMe or something like that. This having insurance, whether it be homeowner insurance, renter's insurance, heck, even car insurance, gives you at least the peace of mind to know that in the event of a loss, you are covered and protected. And I don't know about you guys, but me having a family, that is peace of mind, for me at night. So I know recently too, I've written a policy for about $9. Her policy was $9.80 per month. That's 33 cents a day. And you're getting anywhere from like $20,000 worth of personal property coverage up to really any amount you would want, 50,000, 35,000 that we've talked about. So keep that in mind. It's good to have. All right. I want to make sure I don't miss anything. All right, so I'm just going to give you some tips to help you determine your insurance needs when it comes to renter's insurance. But I think one of the first things that you would want to do is complete an inventory of your possessions. Even if you just get a notebook and jot it down, or those of you who, want to, comprise something like in a document on the computer, however you do it, complete an inventory of your possessions. Personal property coverage is probably the main reason most purchase our renter's policy. The coverage will reimburse you for covered damage, loss, or theft of your personal possessions up to a certain dollar amount. So you'll want to make sure that you get that amount right. So completing a home inventory is a good way to determine how much property coverage that you actually need. This inventory lists your personal possessions along with details about their age. Like I bought, you bought this how long ago, how long you've had it, if you can remember the purchase price. I don't know if it's always my intention to like save receipts and things like that of items that I've purchased, like especially those bigger note items that I've purchased. I don't always do that. The handbooks that come along with it, I have a drawer full of those, but the receipts, I don't. But keep in mind, if you're going to purchase a big ticket item, maybe create a file or something like that to put your receipts in, just so you have a good inventory of your personal property. So you'd want to, another tip is to check with your insurance agent about discounts. If you don't have an insurance agent, I'd be happy to be your insurance saleswoman agent. Even if you do, and you're looking for something different, hello. But many insurers offer significant discounts if you buy more than one policy. The deal is always in the bundle. So if you have, more than one thing for renters, this usually would mean purchasing auto insurance. But life insurance also counts. Business insurance and some other plans may qualify for a bundle discount. Another tip is to choose the right deductible. So a deductible is the amount of a covered loss or liability that you would pay out of your own pocket. So, excuse me, in other words, it's the amount deducted from any payout by your insurance company. So for example, if a fire causes $1,500 in damage to your personal property and your deductible is $500, then your insurer will pay you $1,000. Your renter's insurance premiums will reflect the deductibles that you agree to pay. So if a lower deductible, meaning sometimes you can choose having $100 deductible or a $250 deductible. So a lower deductible means higher monthly premiums. Higher deductibles, 500, 1,000, 1,500 means lower monthly premiums. So keep in mind though that your insurer will not reimburse you, excuse me, your insurer will not reimburse you for a loss that is lower than the deductible. So that means if your deductible is $2,000 and you have a loss of $1,750, then you are entirely responsible for those costs. So it's only going to kick in if the amount of loss is more than your actual deductible. So when choosing a deductible, though, think carefully about the out-of-pocket costs that you are willing and able to pay. So think about that. Another tip is assess your liability. Your renter's policies liability coverage may protect you if someone injures themselves in your home. It may also protect you in case you or a family member causes damage to others' property. Some policies will pay for defense and court costs in addition to settlement costs. The typical renter's insurance policy offers $100,000 in liability coverage, and we've mentioned that. And we said that, pretty much that is sufficient when it comes to renting. However, something to keep in mind that, you may not think about, but if you entertain a lot, have a lot of parties or, dinners or what have you, at your home, at your apartment, or if what you own, if your assets exceed that amount, you should consider an amount of insurance equal to at least the total value of your assets. So if you entertain a lot, think about raising your liability insurance. If you have a lot of assets, think about increasing that as well. And the last tip here is supplement your coverage if necessary. So keep in mind that your policy will exclude certain perils, such as earthquakes and flood losses. The government itself has its own flood insurance coverage. And so normally you'll find that a lot of homeowners and renters insurance policies do not come with flood insurance written in. And it also limits coverage on items such as computers, firearms, and silverware. And it may not, if you run a business out of your home or apartment, it may not cover your business. But if you have like special insurance needs like that, like I did mention earlier, what's called a personal articles policy. So if you have jewelry that is, that you want to make sure is protected, a computer or a laptop that you want to make sure is protected, any type of collectible, if you collect art, or if you have a piece that is very valuable to yourself, if you want to make sure those things are indeed protected, then you want to look into what's called a personal articles policy. But if you have whatever type of special insurance needs you would want to talk to your agent about that, just to make sure that, whenever you get insurance, that you are properly covered. So there's one thing, of course, to have insurance and be covered, but that's another thing to make sure that, everything that you've worked so hard for over all these years is going to be properly protected. Okay, so guess what, guys? That's the end. So I do want to take questions, but before I do that, there were some questions that were submitted before today that I did want to address that I may not have addressed in the presentation itself. But one of the questions, which I thought was all of them are good questions, but I thought this was a good question. The question is, how does it work if multiple roommates are sharing one apartment? Would they share the insurance cost, or would each need their own policy? And the answer to that is it would be beneficial for each person sharing that apartment to have their own policy. You come in with your personal belongings that you have, regardless of whether you guys are sharing it or not. If you had if you guys are sharing and you had the couch or something and someone else had the dishwasher or whatever the case is, you would want to make sure that your personal property is covered. And so that would mean that each of you would want to look into getting their own renter's insurance policy. All right. So this kind of goes along with that. Another question was, if you are informally renting a unit from a family member, can you still purchase renter's insurance? The answer is yes, because you still want to make sure that your property is protected. And another question was, is it better to get renter's insurance through our car insurance company or separately? So if you remember a few moments ago, I said it's always better to bundle. So if you currently have like an auto policy and you want to add renters wherever you have that, that policy at, if you bundle those together, the cost will normally go down. What I've found is, at least here, you get an auto insurance policy, your renter's insurance policy, because the cost is always so low per month, is pretty much free. So the bundle is better. So I will open it up if anyone has any additional questions, and I'll just wait.
So there were a few that were put in the chat that we'll start with. So this is kind of a two-parter.
Okay.
What if you have no idea how much your property is valued at? So this person said most of their belongings are several years old and they downsized when they moved to a new place, so they're not sure how to guesstimate that value. Or do you just go by what it would cost to buy a new TV or new laptop or furniture?
Right, great question. So, if you are unsure or can't remember like how much you purchased certain items for, which is a lot of us, after we buy it, after years of having it, you don't remember really what you paid for it. You could probably do a couple things. The internet is our friend. If you have access to the internet, you can always look up like your TV make and model or something and, kind of Google it to kind of get an idea of how much it may cost. But other than that, when I'm doing a renter's insurance quote, I usually ask, how much do you think in personal property that you have? A lot of us lowball it, but even if you think about if you've lost everything, we're talking shoes, you know what I mean? All kinds of clothing, coats, everything. Usually when things are tucked away, it's normal to not even know how much you have until it's time to move. I feel like a lot of folks are like, oh, I don't have that much until you start pulling things out of crevices. So I guess the answer would be just try to come up with like a fair guesstimate to yourself. If you've lost everything, what would be the dollar amount that you think could replace it all? 30, 35, 40, 50,000. You'd have to like take a good look around and just kind of guesstimate from there.
Great. Our next question was, what does renter's insurance not cover?
So it's more like, well, we know earthquakes. Let me see. So water, and I mentioned flooding. So water damage caused by flood or underground water, it doesn't cover that. So if you have a business, it doesn't cover any liability related to business activities. Although it covers personal injury, it does not cover intentional personal injury. So if you intentionally harm someone, hurt someone, it does not cover that. So that's a thing. And it says earthquake and mudslide. So, it doesn't cover any of those things. So a short list really of things that it doesn't cover. And some things, some situations are so unique, we can't even answer that. We would actually have to leave that up to an underwriter. Like not too long ago, we got, it was about a car insurance claim, but mice had chewed away at some wires or something. And we're like, how's that covered? But it was covered. So it's some on the basic, those things that I mentioned, those are not covered. But if you have a unique situation, the underwriters would have to determine whether that was something that was covered or not.
What do you do about things that are irreplaceable that you can't put a true value on, such as a necklace that would have a relative's ashes in it?
That is a great question. The unfortunate, I guess, answer is those things are irreplaceable. That's just it. You can get like a personal articles policy to protect it in the event that it broke or something. But if it was like, if it was stolen or, lost, then that personal articles policy isn't going to really it's not going to replace it. If they're replaceable, that's the word right there. And that's unfortunate. But in the event that it broke, or let's say if there was some diamond or some type of special stone in it, it would replace the stone, things like that. But that's something that is exactly what you called it, irreplaceable. Yeah.
This one, I feel like a lot of us will feel it when I read it out. Other than costing more, is there a problem with insuring for more than your items are worth? With inflation these days, it would cost a lot more to replace items than it did to originally purchase them.
So true, so true. And the good thing is, that estimated replacement cost. We know that things from 1990, definitely don't cost the same as things today. So whenever we factor in like how we're replacing things, we're looking at like today's cost. So it would not be a bad thing, or it wouldn't be an error to say, okay, well, maybe I have $30,000 worth of coverage, but I want to make sure that if I had to replace it, that I had more than enough to save $40,000 worth of coverage, just to make sure that, that you are protected. So there's definitely, I wouldn't say that I've got 40,000, but I want to cover it for 100,000. I wouldn't say that. But so, something, a little buffer or bumper, I don't think is a bad thing.
And then next, what are some things used for risk assessment in a renter's insurance policy?
Some things used for risk assessment. I'm not sure I follow the question. I understand entirely.
Michaela, that was one of yours. If you want to type in the chat, or you can come off mute if you're comfortable with that and explain what you're thinking.
So for the risk assessment, what are some things that could affect the cost? Things that would make you more of a risk, that if you're in a bad neighborhood or something, would you be considered more of a risk, and then your policy would cost more?
Gotcha. Thank you for explaining that, Michaela.
Mhm.
Location does matter. At the end of the day, location matters. Location matters. If you live in a high crime area, if I don't know, if the building that you're in may be, maybe the landlord doesn't upkeep it as much. But location matters, and that's pretty much the only, because when it comes to a renter's insurance policy as opposed to homeowners, like if it's a certain area, sometimes a third party will come out and look at the house. Look, check out, like if you have a fence up, check out the quality of the fence, check out the quality of your roof, just come and assess the house. Renter's insurance, that doesn't necessarily happen. No one, you tell us that you have $40,000 worth of personal property, we're going to put that down. Your rate will pretty much stay the same. But the initial quote, some of it, a portion of it would be based on where the location of the property is.
So is there, like, if you're in like a floodplain, does that have any bearing on it?
Possibly, because everything is broken down by like each area has a code. So knowing that, we would still insure you. I've never seen a renter's insurance policy like, oh, nope, we can't insure that person. But yeah, if you're, I guess, in an area that's prone to flooding, one, you would want to look, contact the government, find out like about, flood insurance, just as an additional additive or add to your regular renter's insurance policy. But typically, honestly, I've never I have not seen, I think like the highest per month for renters insurance I've seen may have been $20. So it's, and I
Got it.
can't
Thank
even
you.
remember what the breakdown of that was. You're welcome. Thank you.
Another from our chat, for both home and renters insurance, if you have a loss, you have to come up with receipts to receive the money from your insurance for those replacements.
No, no, because if you suffer a loss, you're saying the amount that you gave, I think too, it depends on what it may be. Let me see, because I don't want to, that's coverage gaps. Well, that's still flood insurance. That is a good question. I was looking, I thought I had that. Let me, I will find out for you. How about that?